Today, I'm going to talk about NetSuite Accounts Payable module. So, as everyone knows, the NetSuite Accounts Payable has multiple scenarios, right? So, we have first procure to pay, where we talk about the procurement cycle, the from purchase request or purchase acquisition in some cases, or in some cases it starts with purchase order. So we talk about the purchase order, then we have a receipt, then we have a vendor invoice, right? And then we make the customer vendor payment, right? So that is one part of the accounts payable module, which generally it is assumed that this is the complete cycle. No, so that is one piece of purchase cycle. Then we here comes the exception. Okay, so in exceptions we talk about the return part, how return can be created in NetSuite system. So that's we are going to talk about. And then there are multiple case scenarios with for accounts payable. So I'm going to explain in the Excel, like, okay, what are the different scenarios we're going to cover. And then we will be going beat by beat in NetSuite system that, okay, how that whole module is configured and can be configured into NetSuite system. Okay. So just bear with me. And so this will be the first, generally how I prefer, I create so many case scenarios. Okay. And accordingly, you will be trained that, okay, how many case scenarios we can have on procure to pay. And accordingly, we will be going step by step. So let me start with NetSuite accounts payable. Okay, so this is just an introduction for NetSuite accounts payable model that we're gonna see. So let me mark it as bold. Okay, so I'm going to define it in a different case scenarios. Okay, where we will be, and that's what we're gonna demonstrate into the system. Okay, so this whole accounts payable means what, right? A company is going to this is the procurement cycle, if I say in a easier terminology. So company or any I would say any institution wants to buy an item from their supplier so that they can sell it to their customers, right? So that is nothing but the procurement. It can be anything, right? It can be like, let's suppose in our day-to-day life, right? We buy an item. So that cycle definitely is covered. You're gonna buy some item, then you receive those product, right? And then you pay the money to the vendor, right? So that's what happens. So that's my case scenario number one, where we're going to talk about how if I start with purchase order. Okay, so we have a purchase order. So how we create a purchase order, that's the stage one. So purchase order is nothing but you going to buy an item from the supplier. So that's your purchase order. So this is basically an mutual agreement between company and the supplier that, okay, supplier is going to supply that item, and on behalf of that item, you're going to pay some money to your supplier. So there is no GL impact on purchase order. Okay. Now, the next step it happens if there is if you are buying an item from different countries. So let's say suppose US is buying an item from China, right? So US company is buying an item from China, then item will be shipped from ocean. So then there is an inbound things takes into place, but I'm not going into that direction. I'm just trying to make it very simple. So when you create a purchase order, after that, what happens? The company, the supplier will receive the notification that, okay, this is the mutual agreement and I need to supply that many item, whatever is mentioned on the purchase order. So once that is supplied by the supplier, right? Then what we do, we create an item receipt. Item receipt is nothing but the next step in the cycle where company receives the product which is supplied by the vendor. Okay. So the master data, if I say in that way, for this case scenario, you have a vendor. In some company, they call it as supplier as well. Okay. So you have a vendor, and then from vendor, you're going to create a purchase order. So then item receipt is created, right? Then the next step is what? Once the item is received, right? Definitely vendor is going to send you some bill, right? Send company a bill. So To capture that, so that's our case scenario is like vendor sends invoice, or I would say bill, for the delivery of product, delivery of product, or you can say as an item. Okay, so for that we create vendor bill. So in some company, some terminology, we call it as a vendor bill, or you can say it as a vendor invoice. Both is fine. Okay, but the meaning is same. Okay, now once that is done, let me make it CE, right? Okay, now once this is done, okay, then on once you receive the invoice, once, when I say you, it means company. When company receive the invoice, right, company makes the payment against it. So the vendor payment is made to the supplier. Okay, so this is the standard, very basic cycle of procure to pay, where company place a purchase order. Once item is received, they create item receipt in the warehouse, and then vendor sends the invoice, and against that invoice a payment is being made to the supplier. Okay, so this is the standard procure to pay cycle. In this case scenario, okay, whatever the customizations goes, right, there can be multiple case scenario, like, okay, some company uses approval process, so that will cover for before creating the purchase order, right, you can have an approval process. Or for item receipt you can have multiple case scenario. For vendor bill you can have multiple case scenario. For vendor payment you can have multiple case scenario. But end of the day, the raw or the native cycle will remain only these four stages. Okay, now then here comes case scenario number two, which I generally cover. That is nothing but an exception part. Okay, so in interview, in NetSuite interview, generally we ask what is the exception scenario of procure to pay. Okay, so the student or the interviewer get confused. Okay, what you are talking, is it something extra? But no, it is the return part of the procure to pay cycle. Okay, like for example, company wants to return the item to the supplier. Like suppose you receive the item in a company, and that item is damaged, then how you going to return that item. Okay, so that cycle starts with, and this is the basic fundamental cycle which I'm going to explain in this whole training for accounts payable. So this whole process starts with vendor return authorization. So we call it as a vendor return authorization. Okay, so now this stage says that, okay, company, or I would say customer. Okay, so company returns, or I would say initiates the return to the supplier. Okay, that I don't like your product, so I need to return this item. Okay, so for that we raise the vendor return authorization. Now, when the vendor return authorization is created, so it's a non-GL transaction. Non-GL means there is no, it's just a mutual agreement. So just like a purchase order. Okay, so you have a purchase order. Here you are placing the order that, okay, you want to buy an item. Here you are creating it that you want to return the item. Okay, so just like we do in a day-to-day life, right? For example, in Amazon, right, you return the product. So think in that way. That is on that case, general, we people, we consider ourselves as a customer where we return the product. But if you see from the Amazon's company's point of view, Amazon is if Amazon is buying a product from different supplier, right, and he received the bad product, then he will definitely return that product, right, to those supplier. So that is considered under vendor return authorization. So now once vendor return authorization is created, okay, so then what happened? The whoever is the person, right? Whoever is the supplier, they will send an employee, or or you going to return that product to his warehouse, right? So you're going to create an item fulfillment. So this is basically item fulfillment, but this item fulfillment is like against the purchase order. You are shipping that item back, shipping item back to the supplier. Okay, because for the return product. The reason, think in this way, okay? So for example, you had received, so let's suppose you buy an item, okay? So initially you purchase a TV from your supplier. So you order, let's say Samsung TV of 100 quantity, okay? Once you, so here you place the order of Samsung TV. So this order is placed as a purchase order. Then you receive the product. So what happened when you receive the product in your warehouse? Definitely the product quantity increases to 100, right? So your product quantity raised by 100 quantity. However, out of that 100 quantity, assume the 50 quantity was damaged. Okay, generally it doesn't happen, but I'm just telling you. So think about a scenario, out of those 100 quantity, damaged quantity is 50. Okay, so definitely you will be returning this item, right? So for this item, you will be calling Samsung company that, hey, the product is damaged, I want to return it, right? So they will be sending some person or whatever the shipment, and then you will be returning that item to those company. Now when you return this item to that company, right, you will be delivering this item basically from your warehouse. This 50 quantity will go down, right? And that means you are fulfilling back that item to Samsung company, and that is nothing but your item fulfillment you are creating over here. Okay, now once this step is done, that means now vendor owe you some money. Okay, so vendor need to pay you that money, that okay, you need to, you owe that money. So in that case, in some case you can receive the vendor credit. Okay, so this credit is nothing but, some vendors say that okay, you can use this money when you buy an item next time. Just like, if you remember, during COVID period, you have booked a flight ticket, and those money came as a credit, so that whenever you next time book the flight, you can use that amount, right? So think this scenario is the same, where you have the money. Okay, the company says that okay, I will not return that money. However, you can use this money whenever you are next time you will be buying that item, so you can adjust that money. So that's the vendor credit scenario. So you have vendor return authorization, then item fulfillment, and vendor credit. So that's your standard scenario for the return. Okay, now case scenario 2, case scenario 3. So now if I continue, just a continuation of this, if assume the vendor has given you some amount, right? So let's suppose vendor has given you a credit of $10,000, right? So in case scenario 3, we are going to show you how you can apply, how to apply the vendor credit to the next purchase order. Okay, so next time whenever you buy the item, right, how you going to apply that item whenever you buy the product from the same supplier. Okay, so that is going to be our case scenario number 3, which will be part of this accounts payable cycle. Then now there are some there will be some interesting scenarios as well. So I'm going to give you a scenario. Okay, so let's suppose you are generally what we do. We, for example, I want to buy. Think about me as a company, and let's suppose I want to buy 50 quantity of chair, for example. Okay, so I'm going to place an order. However, there is an agreement between the supplier who is going to supply that item, that 10% of that amount I need to pay in advance, and rest 90% I will be paying after the item will be shipped. Or contract can be different, right? You can pay 30% in advance, and then remaining 70% you can pay later once the item is ready, right? So to capture that scenario in NetSuite, we have a functionality, or we need to enable a feature called vendor prepayment. Okay, So this is nothing but a capturing an advance payment to the supplier. So that is also an exception case. So here this whole cycle starts with whenever you create a purchase order, right? Or whenever you are paying an advance payment to the supplier, right, against a purchase order. So what you can do, you will be creating a vendor prepayment. That is the advance payment made to the supplier. So I would say here advance payment made to the supplier. Okay, and then you will be placing the purchase order. So for example, here, if you focus on the same row, so let's suppose the total purchase order price is $10,000. Okay, and I am paying, let's say, $4,000 as an advance. So once the product is ready, okay, like here, uh, once the product is ready, that means I will be receiving the product and supplier will be sending me the invoice, just like in case scenario one I have explained. Okay. Now here you will be making the payment to the supplier, but the expectation is you will be not paying $1,000. General case scenario, we will be paying the remaining $6,000 as a payment, right? So that scenario we're going to there are so many, so let me just increase this. So that scenario we are going to cover. So you have a vendor prepayment, you have a purchase order, item receipt, vendor bill, and vendor payment. Okay, so here you're going to pay the remaining amount of the PO. Okay, so that is also one of the scenarios which we're going to talk in this accounts payable module of NetSuite. Now, so this is the standard case which we generally are going to cover under accounts payable. Now, let me just make some, let me just add some light color. Okay. Now, case scenario number 5. Okay, so case scenario number 5, this is basically here you have another scenario. Generally, we talk about landed cost, and this is very important in terms of your whenever you appear for any interview. This there will be 2 to 3 questions, or even you are cracking or in the certification exam also there will be a question related to landed cost. So what this landed cost is? See, landed cost basically uh, think that in this way, whenever the item is coming from one place to another place, okay, generally or let me make it very simple. When you, as a customer, when you buy a product from Amazon website, right, we pay shipping charge, right? We pay shipping and handling charge. So let's suppose you are buying an item of $300 and $20 you pay as a delivery charge. So the total product, how much amount you are paying? You are paying $320, right? So that is basically the standard landed cost. However, that differ from supplier to supplier basis. So landed cost, if I say landed cost itself a topic which we are going to talk in very detail. So here I will just give you a high level idea so that you can understand the flow. Okay, so landed cost basically, uh, I would say, let's suppose you are buying an item of $300. Okay, so the purchase price, PO price, purchase order price, let's say, of an item is $300. Okay. Now you are paying shipping charge as $30. So ideally, you the total purchase order price is nothing but is $300 only, right? However, you paid $30 as a extra charge, shipping charge, right? In total, how much you paid? You paid $330 for the total amount of the purchase order, right? So here there can be multiple scenarios, okay, that I will be explaining in the training when I will go in the system and I will go step by step. So customer one, there can be multiple customer when you face them. So customer one will have the requirement that, okay, my assumption is I will be calculating my profit, that okay, if purchase price of one item is $300, and shipping charge I am paying $30, then the total amount I am paying $330. Okay, then my and let's suppose I am selling the product, selling price of the product is, let's say, $400. So my profit is only $70. So some customers says that, okay, I will be capturing $70 as my profit. Okay, because I will be in total how much price I paid, that matter, including the shipping charge. Okay, so some companies say that, some customers say that, okay, landed cost need to be included with the purchase price of the item, and then they decide what will be the selling price, and on top of it their profit or margin will be calculated. However, some customers say that no, we have a separate tracker, okay, for that $30. Okay, so we have a separate account, shipping and handling charge account we created. Okay, and shipping and handling charge account. Okay, and they don't, they want the pricing of the product separate with the delivery charge. They don't want to calculate on this, because some companies say that, okay, my delivery charge can differ, right, and that will affect my purchase price of the product, right? So if I am buying an item in $330, it can be 340 next time, it can be 370 next time, right? So this will be misleading information for their product. Okay, so what they do, they track this shipping and handling charge separately. Okay, so if I say in this way, right, here how many scenario came up that we need to see as part of procure to pay cycle. One, what is landed cost? Then the standard flow is, if landed, I would say landed cost need to be added to the purchase price of the item. That is one scenario for me. Okay, that we will see how that scenario can be covered. So here we will see what setup need to be done, how the costing is getting impacted for that item cost. Okay, and how profit is being calculated. So that is one of the scenario. Okay, then you have case scenario 6. If landed cost is separate from the purchase price of the item. Okay, so it's completely handled differently. Okay, so then that is one of the scenario. Here we will have a shipping and handling account, and there we capture that. Okay, then you have case scenario number 7, and this is very interesting. Okay, I will say you, I will explain you in an example. Let's suppose US company is buying an item from China. Okay, so item is being manufactured in China or in India, and item is delivered from China or from India to USA. Definitely it will go from ocean, right? So there will be a freight charge with that. So let's suppose the product cost is $10,000, and carrying that product from China to US took $300 extra. So total $10,300 in total product price is being paid by the vendor. Now, there is a twist here. Chinese company is only responsible for the product, so they will be delivering it to the US company. However, there is a third vendor who is only responsible, and who he does not, that company does not care what item company A is buying and what item company B is selling. He is not worried about it. His job is to get the item from the supplier location and deliver it to the destination location, right? So during this charge, right, during this journey from the supplier location to the customer location, whatever the charge will be, he will be charging that amount separately. Okay, so if I say in this way, so PO price Chinese company is charging. So supplier is, there is a supplier one. Okay, I would say vendor one. Okay, that vendor one is selling a product price of $3,000, for example. Okay, so this is your PO price of the product. Okay, product. So this vendor one is only worried about this $3,000. Okay, then there is a vendor two. He is charging $300, and this $300 is nothing but a freight charge. Freight charge for the shipment or for the delivery. Okay. So for one PO, there is one purchase order created. Okay. One PO created. However, there are two vendor in it. Vendor one, who is one cycle, who is only responsible for the product price. And there is another vendor who is just charging the freight charge. And end of the day, the supplier, both the supplier will receive the payment in total $3,300. However, that amount need to be distributed between these two vendors. Okay, so the case scenario will become like this: if landed cost is charged separately by another vendor. Okay, so if I say in this way, so and then generally, if you remember, there are so many courier companies, and their job is just to do delivery from one place to another place. That's what their job is, and those company only charge for this shipment. Okay, so that is very interesting, and this is also a very important question, how the landed cost can be calculated if item is being supplied by another vendor, not by the native vendor. Okay, so that's what we're gonna see here. Okay, so this is our case as a total 7 case scenarios which we're going to talk. Then there are another cases for this is employee suite approval. Okay, so and now I'm going to talk. This is the standard scenario, whatever we have. Okay, then we have a suite approval that we also cover. This is a new apps that has been added recently by NetSuite, and that is also covered for the demo part. So here you see there are 8 case scenarios is I just explained. Okay. However, when I will explain in the system, okay, we will be checking so many scenarios. So let me just show you an example how we explain, so that you will be having an idea that how this whole scenarios will be covered when we will be explaining it in NetSuite real life. So here you see, uh, we will be talking about the GL impact, like, okay, how the GL impact flows when we go to the NetSuite system. Then we will be talking about the extraction scenario, as I told you. Then the vendor credit, how it can be applied to the next purchase cycle. Then landed cost, there are so many landed cost scenario. And then we have a prepayment scenario. And there is also I talked about the suite approval, and in within that suite approval, we also have a vendor three-way matching. So vendor three-way matching, as I told you, as I used to explain to my students that nowadays it covered under suite approval itself. Okay, so this will be, I would say, sub case of approval process. Okay, so vendor three-way matching. Let me add that separately so that I don't forget. Okay, so we will be covering this way, and definitely whenever we go one step by step, then there will be a lot of scenarios. We will be talking about how the some customer approaches, how customer two approaches, and then how the profit is being calculated. So this we will be talking in very detail when I will be explaining in next session, when I will be talking about whole procure to pay cycle. Okay, so this whole course requires your involvement minimum of 16 hours. Okay, 4 days session it is to cover each and every aspect of NetSuite. And from the reports as well, we will be talking about. So this is a very rich module nowadays where people is looking for learning this module. So I hope you really like this video as an introductory part, NetSuite Accounts Payable, and see you in the next session. And feel free to reach out to our website if you are interested and you are looking to know more about this accounts payable model for NetSuite. Okay. So for till that time, thank you everyone. Thank you for your time, and I'm going to stop the recording, and we will